Ladies and gentlemen, welcome to the Big Tech Frenzy. In today's video, we are going to be talking about SoFi, Robinhood, BMNR, Affirm, DLocal, Shift4, Nubank, rate cuts in general. On the less fintech side, we are definitely going to talk about Tesla and Nvidia, stuff like this. Maybe some Google, Waymo in particular. Hopefully everyone is doing well. I mean, what is going on with DLocal to start with? I mean, that's probably number one. Like, what an amazing time to do a little bit of a first look in this company and take a little bit of share in the company. Now we've seen 2 consecutive days with 3+ gains in a row. I mean, it's not the fastest. It's not like a 15% gain in a single day, but it feels good to be green. Takes a little weight off the shoulders. Can look into the company with a little bit more peace. Hopefully, people aren't going all in just because I said that I'm looking into the company, but it is maybe worth a decent look. And on the Discord, we do have a little place where people can share their ideas on the names. And we can explore some other investment ideas. So maybe that will be fun. Dookie Pie making her presence known. Thank you for being here, Dookie. Yeah. Tanner would be late to his funeral. I was on time today. I was super on time. I don't think that's fair. Timeline Tanner, what's up? How's it going, guys? That was a good stream last night. I liked, talking about the Hood Summit. That being said, speaking of DLocal, not just being up a little bit throughout the days, but also being up in the after hours because they continue to post interesting news. DLocal joins forces with Google to help define agentic payment protocols, AP2, the open standard for AI agent payments. So DLocal, they're not going to be the only company that's working with Google for this, but it does help that they're also being a part of it. There's only a few select names in payments that have, one-stop cloud platforms to integrate hundreds of different payment options into one platform. So essentially a single point to collect any form of payment from users to merchants, and then also vice versa, right? To do payouts to creators or drivers or whomever. Maybe it's for Uber and LATAM, what have you. So because of the flexibility of their technology, Google said, hey, you know what? We are going into a world of artificial intelligence. A big part of that artificial intelligence layer is going to be, payments. And so we need to be working with the best. And DLocal definitely came up and is working with Google, which I think is definitely not a bad sign. We like to see these sort of things. So we'll continue to do more due diligence into DLocal, but so far, so good. There was other small pieces of news of other payments companies starting to show off that they have new merchants. Affirm just showed off that they're now working with Service Titan. Okay, so allowing flexible payments for consumers to pay out trading or trades members, whether that's plumber, electrician, what have you. So allowing them the option of having Affirm as well. Not a bad option. Judo Pay for Shift4 is now available across the UK for flexible payment solutions. So that was just another notch on the Shift4 belt. These individual partnerships is not what's going to make or break these stocks. It's not like Nebius end up landing some massive deal, right? You sort of saw that whenever Affirm did its first partnership with Shopify, or Affirm landing its first deal with Apple, right? These are not quite to that level, not even close, but it does help the more merchants that they have, especially ones that are platforms that enable them to pay out to even more providers. That's the interesting thing about payments. It's really just market share gains, and like the more payments that end up flowing through the system, the more money that those companies end up making. It's pretty simple that way. Affirm a little bit different. It's more on the underwriting side and not only seeing the types of payments that are flowing through, but the types of customers that are taking those payments. So that's a little bit different, but maybe we'll do a little bit more of a dive into Affirm going forward, because Klarna is one that everyone was so hyped about on the IPO, and the stock ran up. But I'm like, if you guys want buy now, pay later, just buy Affirm. Like, a very similar company is already available for IPO access. I think that's sort of the problem with, Chime going public during these times, or Klarna, is that there are comps in the market that, potentially make those existing players look even better. So for Chime, it was SoFi. For Klarna, it was Affirm. So I think that those are sort of problems there. I think what people are hoping for is, where's the Stripe IPOs? Where's the Notion IPOs? Where's the Anthropic IPOs or OpenAI? The players that are much harder to go out and find serious competition for that specific niche. All right. No hat is definitely good. I mean, I've got it close by. I can pop it on real quick if you want me to, Dookie. I don't mind. Seems like a good sector to learn company analysis on. You mean the payments industry? I think it can be, for sure. You learn not only about just how those businesses form and work and market share gains, but then also the intricacies of how it is to expand into multiple different countries, foreign exchange rates, so many different things that play into it, competitors and the layers that are built on top of them, like multi-payment authorization, stuff like this. So there is some deeper aspects of payments that make you look much deeper. Upstart, yeah, I mean, Upstart's going to be a big part of today's stream because we're going to be talking about rate cuts, and Upstart's going to play a big role in that. But I don't think the market really cares too much about the Upstart theme right now, and that they need them just to perform fundamentally. I think everyone understands what Upstart has to offer, and they understand that the story that Upstart is trying to tell is not quite what's actually happening fundamentally. And the company that's actually potentially not trying to, oversell their story, saying that they're creating a model that can be used across any form of credit and delivered across the world, meaning SoFi, not saying that, is actually just doing, much better. And markets are actually really respecting the fact that they are not overselling themselves, at least right now during this rate cut environment. But rate cuts should affect Upstart more than it should SoFi. Okay. The reason why I say that is because Upstart gives to such a low credit individual that a lot of the loans that they do believe a user should pay, the certain rate, goes actually above the maximum required, or there's a cap on how much interest rate you can charge. I think it's 32%. It's 32 or it's 36. I think it's 32% in America. Could be 36. Someone will correct me in chat. And for a lot of the people for Upstart, they're actually they're not able to give loans out to those people because they end up surpassing those rates in terms of the eligible risk that is applying to give a loan out to that customer. If there's a really low chance that they'll pay back their loans, then you need to apply a really high APY to, pay back that risk. So Upstart should do very well in a rate cut environment. SoFi actually benefits less because they, the customers that they are wanting to give out loans to, they can give out to everyone. It's 36. Okay, thank you. I don't know if it was changed in Canada, but it was 29.9. No. In Canada, it's like 60%. You can give very, very high rates in Canada. If you go to a company like GoEasy, for example, and you look at their stock, which they are truly predatory loans in America, in Canada, I think their average interest rate on their loans is something like 45%, which is above the legal limit in America. So it's crazy. It's crazy how high their loan rates are. However, I made some decent money on GoEasy at one point. It was pretty nuts. Okay, let's get back into it. Now, I don't know if that's changed. It was that way a long time ago. Dookie Pie, we will talk about this. So Vlad Tenev did end up selling a lot of shares in Robinhood. In fact, I already have it pulled up, which equated to about $400 million in Hood stock. I've got zero problem with this. You know, I don't know about if people do have problems with this. That's the way that these CEOs are paid. I mean, he's been building the same company since 2013. You know, at what point do you allow him to take some chips off the table and put that towards either Harmonic or other personal, you know, expenses that he has? So I think selling is, there's so many different reasons to sell. There's only so many reasons to buy. So I think it's more bullish whenever someone buys than it is bearish whenever they sell. Vlad Tenev still has a massive share in Robinhood, and this is not trying to change that or anything along those lines. So I've got no problems with his ability to sell some shares on open markets. So no, this doesn't, you know, change my thesis on Robinhood at all. Yep, look at Bezos selling, and I'm still extremely bullish on Amazon because it's really not tied to his love of Amazon. It's more tied to his need of capital. When will SoFi have the same amount of free cash flow as Robinhood? So Robinhood included, not just for SoFi, but financials should not be judged by free cash flow just because of the way that free cash flow is calculated. So for example, if you flip a loan from being held to maturity to held for sale, meaning, hey, this is what I plan to do with these loans, that is actually negative on free cash flow. So SoFi's free cash flow will forever in eternity be extremely negative, but it has nothing to do with their ability to raise cash and then put that back to growth or put that back into dividends or buybacks. So free cash flow is a little bit of a metric that's not built for financials. And so zero financials are ever judged on free cash flow. In fact, Andre, I'm not picking fun at you. Obviously, we have people that want to learn more about all these stocks, but there are quote unquote fintech experts and these sort of people online that value companies for, that's what they do for their day job. And you can immediately spot the biggest red flag is whenever they're looking at SoFi and they talk about free cash flow. It has nothing to do with the company. I'm not saying that to defend them and say like, oh, they're going to run negatives for a little bit. No, it'll be forever in eternity negative as long as they have a similar structure of putting loans on their balance sheet, flipping them to sell, and then selling those to institutions. That's just how free cash flow works. It's completely irrelevant for banks. Financials are, and that's not a SoFi thing. That's a financial thing. Financial meaning the segment or the sector. Sorry. Little sip of coffee, shall we? I mean, it's 7 p.m. We can have a coffee there, right? That's not crazy. Gotta love it. Little iced coffee, meaning I brewed this coffee a while ago and then I put ice in it and then it becomes iced coffee. But yeah. Mickey D's. No. This is just at home. I'll keep you guys guessing on what coffee I'm getting. Uh, 7 p.m. coffee, good night sleep. I literally had a coffee last night at like 11 p.m. during our stream. I was drinking a coffee the whole time. I went to bed like snoring at like midnight. I find caffeine does not affect my sleep. I don't know what it is. When it's bedtime, I close my eyes and I immediately am out. Costco coffee. I used to get the Kirkland ground coffee, but I didn't see it last time. I think it's actually like Maxwell House or something like this. That's funny. That's funny. Shark Ninja makes coffee. It was with a Shark Ninja coffee maker. That's funny. Costco brand is made by Starbucks. That's really interesting. And you know what? I do believe that. I don't know if you're saying something that's true, but most of the Kirkland brands are made by the top producers of those products. And it's just white labeled to Kirkland. Tanner, it's because you're in your 20s. Wait till you're in your 30s or 40s like Tevis. Nice. Okay. Let's get into some more pieces here. So, according to CME Group, the FedWatch tool ended up showing off once again 100% rate or 100% chance of a rate cut, with now only 4% chance of 2 rate cuts, with December showing off essentially 3 rate cuts by December of 2025, and the lowest chances of potentially 1 or 4 cuts and a decent rate of 2 rate cuts. I do hope that we end up seeing a rate cut in September, a rate cut in October, and then a rate cut in December, leading to 75 basis points in 2025, which would be just slightly above SoFi's expectations for the full year. Okay. And hopefully ramping their ability to sell more loans. Now, I was going to show off a video yesterday or tomorrow talking about SoFi and how they're doing. I showed off a slide recently on the Google Trends of SoFi, but it's just a bar graph and hard to visualize that nearly enough whenever you're just looking at the sheer numbers. I'll show you what I'm talking about. If you go into SoFi, if you go into Google Trends, you start looking up some SoFi, terms, you can end up finding the data by just, taking out the CSV, downloading it. It'll look something like this for these terms, right? SoFi, SoFi Bank, SoFi Invest, SoFi Loans, SoFi Checking, SoFi Credit Card, just a broad range. We find a very consistent thing. So if I just grab the yearly data, I put lines in here to show off the different quarters. So this is Q4 of 2024, Q1 of 2025, Q2, and then so far in Q3. Okay. Now, I know it's really small. You guys can't see the numbers. I made it easy to visualize. I took the averages of each one of those days during those quarters, averaged it out, and put this on a bar graph as well. So let me make this as big as possible so we can end up seeing it. But you guys can see the trend already. I can make the lines bigger, and then we can make the data just a little bit bigger as well. But this is what it ends up coming out to be. That across the board, anything SoFi, and remember, we saw unbelievable results in Q2, record-breaking, okay? But the difference between record-breaking for SoFi from Q4 of 2024, Q1 of 2025, Q2 of 2025 was essentially from base level a 43, a 44, and then a 47. This is rated between 0 and 100 on how much they average in that time frame. So this was across a 1-year time frame. There was essentially a 50% increase for SoFi Invest searches, SoFi Bank, SoFi credit cards were by far the highest average searches at 88. This is just incredible. I mean, some of these, like if you see like in green here, the average searches for SoFi loans was at 51 a few quarters ago. Now we're at nearly 85. Like these are huge percentage points changes. And a real tick up in the last quarter, especially for loans, especially for SoFi Invest, which essentially just looks like a hockey stick. It's just flat across those last 3 quarters, which were very successful quarters, into explosive growth in Q3. Now, there are some signs pointing to September, the back half of September, not being as strong as July and August. Okay. So maybe they're cooling it on the marketing. Like, I don't know 100% the style of management that SoFi has, but if I were to guess, they are averaging a certain amount of spend per quarter, a certain amount of growth, and then after that, they don't have to go in aggressively. They can work on unit economics, tighten their amount of underwriting standard. They'll still obviously bring on new members, but it does look from the searches, if we can see here, that in Q3 you ended up seeing. Let me bring this up a lot more. That SoFi, for example, in this quarter ended up ramping dramatically, hitting a peak in July, and then now starting to get back into normal ranges. Okay. So maybe during this period in the first 2 months, we saw good enough growth where we ended up skyrocketing past our expectations. And now it's like, okay, well, we don't have to invest nearly as heavily, and we can actually focus on margin. So what that means to me is I'm going to expect not only really high growth, but also really great margins because we actually tightened up at the end of the month. If it was just growth at all costs, I would say, hey, we're going to see by far the highest levels of growth that we've ever seen, but potentially we're not going to see it in margin as much. Maybe we sacrifice something in order to bring on those great margins. But if they're tightening their spend now because they've already skyrocketed past their, the targets that they were trying to hit for this quarter, then they can do that. Wait, how many people actually have a SoFi card? It's roughly about 400,000 people right now for the SoFi credit card. But I could absolutely see a quarter this quarter where we see like 50,000 new ads, which would be by far the highest we've ever seen. We'll see. I'm getting way less email promos lately. I mean, that is exactly my experience as well. Extremely anecdotal, but at the start of this quarter, it was huge. There was a ton, but now it really has started to slow down. So honestly, I do think that they've hit some level, like targets of growth. Some real managers. Like, I need to talk to some C-suite people who have actually created real business to talk about how achieving those targets actually works internally. But yeah, I'd like to know that which makes me think that like SoFi is not trying to hit those 100% level growth rates and stuff, that they are trying to hit some sustainable level of growth, which is probably more prudent, but still. Yeah. Are we bullish with rate cuts tomorrow? I mean, the market can tell you the answer to that, but the answer is obviously yes. Okay. SoFi getting to some of the highest closes that we've ever seen. Today had a slight pullback. It looked like it was going to be more drastic than it actually turned out to be, but the market ended up buying the dip, bringing it back up. So if we see the full day here, let me just switch. You can see SoFi ended up crashing at market open, which we were actually approaching $28 per share. Maybe we hit it in the pre-market. Looks like we did. And then crashed in the open market all the way down to 26.64 roughly, and then started to get back up, closing above 27.42. So, yeah, that's the market saying that they believe that SoFi is going to benefit from rate cuts by selling loans, turning around, offering that new capital back to more users, and repeating the cycle over and over and over. Essentially, without even seeing September data, just going off the Google Trends, the website traffic that we've already seen, everything, this is looking like a blowout quarter. Now, tomorrow I'll probably still make a video on this, but it's very important, is what do you do after a run-up like this? This is why I didn't trim. There were a bunch of people that told me they sold half their position at 22. They sold out, all these things. I would not, I think some people are looking back at the price that we were and seeing how much we've ran up. And then that's their indication that we are starting to approach some level of overvaluation, rather than actually taking a look at the data, seeing what the competitor stocks are trading at, how much growth that they actually have, realize that we're the fastest growing bank in our industry, taking market share like, gangbusters across every single product line. I mean, those are the things that I'm going to continue to focus on, and it's worked out in spades. So how does Tanner keep his t-shirt super? This is not even white, by the way. I don't know if you can see that. It's not even white. But yeah, taking profits is healthy as long as they can live with the outcome if the stock continues to run. I think that's a fair piece of criticism. Obviously, taking profits is not bad. Like, fully aware, right? But I'm at the point in my investing career where I am looking for generational businesses, and the people who I admire, the Don Valentines, the Bill Millers, the, to some degree, Warren Buffett or Peter Lynch, these types of guys, they buy companies and they hold them for way too long, and they don't take profits the whole way up, because by the time a company has appreciated so much, usually the underlying business has changed to some degree. From Q3 of 2024, Q2 of 2024 to now, we did not have the loan platform business. Okay. It's the biggest new segment of the business SoFi has ever added since being a public company. And that was not part of the thesis back in the day whenever we were hoping for $20 a share. So I'm hoping for the stock to continue to appreciate, but I also hope that with that new capital, with them, diluting a little bit to raise more capital, that they can increase their level of growth, find, more customers that need our loans, expand internationally, put out new products like level 1 options and everything, which they are all planning to do, and offer those back to members, and that will return back in more revenue, higher margin products, more, fee-based revenue, and the cycle continues. So everyone wants a short-term price target. Hey, where's this company going to be after we get 3 rate cuts and everything like this? And the truth is, I don't have those answers. But I do hope that if SoFi continues at this level of execution, if there are more members at legacy banks that are still getting charged $15 a month, and they have hundreds of thousands of dollars in their bank accounts, okay, and they're getting poorly treated, that if they learn about this experience, which brand awareness is growing, TGL is coming back, SoFi Stadium, people are pouring in for NFL season and everything, like the spend continues again, that there will be an entire new cycle of SoFi customers who are happy with the products, start investing, more deposits, more loans. Financials has been like a historically good segment to invest in. JP Morgan, Bank of America, these investors have been very happy. Warren Buffett's had a lot of money in financials over his years. A lot. This is mixing the technology, the growth, the financials have always been an asset heavy industry, right? Capital intensive business. However, with fintech, now they don't have to throw that capital towards buying land, standing up branches and having people come in and promote those. No, it's just all on the app, right? So it actually does allow them to be a little bit more capital light, and then put all of their capital towards the things that are actually returning the most capital, which is, student loans, home loans, personal loans, stuff like this. So I like fintech. I like SoFi a lot. I'm going to continue to invest. And with rate cuts coming, I think that it'll be interesting to see what Anthony Noto has done. By the way, the SoFi that we've seen that I've been talking about for 4 years has been one of heavy headwinds. Everything against SoFi. Regulation, taking away of certain segments, the fastest increase of interest rates that we've ever seen in history. Those are bad, 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 bad. Now we're finally getting to see rate cuts. We're getting to see an administration that wants to help cut down on the regulation. And artificial intelligence, blockchain, all of these things, the technologies that are helping are also allowing the companies with real capital to accelerate even faster. So now they're running with the wind. They're running against the wind for a long time. Now they're running with the wind. 4 years ago, it was a meme stock. No, I think in the $20 ranges, it was a meme stock. I think in the single digits, no matter what time that you pick for this company, it was never a meme stock. There was not a time in the single digits where it was a meme stock. Like, Anthony Nota's been working there since it's a public company. They've had the same management that people are happy with now at 27, same management that was there whenever it was $4. Investor perception might have changed, but the person running it has not. Tanner, what are the fintech stocks that have advantages on a weak dollar? I mean, foreign exchange companies. So anything that deals more in international markets than, U.S. markets, as long as those international markets that they specifically are in are not also weak, as well. Maybe there's a weak US dollar, but if the US dollar is weak and you're betting on a company that is fully in Venezuelan Bolivar, you would have still gotten wiped out. So, yeah. International cross-border payments, I mean, those have done well. Crypto to some degree, that sort of stuff. Did you buy BMNR? Did you buy DLocal? Josh, I've been saying for a while, yes, I bought DLocal. Yes, I'm definitely buying BMNR. Own both of those names. I do not have a position in Uber. However, I will be doing a closer look into that company probably next Friday or some Friday to come. I don't know what company I'll do next for our fiscal Fridays. By the way, every time we do one of those shows, I get a message from Fiscal's team and they say like, holy crap. So really do appreciate your guys' support, checking them out. It is obviously an amazing product. But I think that they are surprised by the community's engagement. So thank you to you guys, whoever are using the product. Also, just check it out for free. There's a free trial if you use the link. So let me know if you like it. I think they give you the pro version for free, which is like the middle tier. But really, you don't need anything more than the pro. That's about as good as it gets for anything other than an institutional investor. Okay. Would you buy more SoFi or more DLocal? I mean, it's hard for me to say. I mean, my conviction is higher 100% in SoFi. I know the business. I understand the management. You're talking about a company that I'm building essentially a single digit or like single percentage position in right now, and hopefully that grows. But versus SoFi, I've got what's growing into above a 10% position for me. It's a much, much bigger position. So would I add to that? Well, that's very hard for me to do because I already have a fully built out position. DLocal's new. I don't know it as well. I don't have as much confidence in the name, but it is definitely not ran as much as SoFi. I would say it's probably cheaper than SoFi, but I'm not looking to trim SoFi to buy more DLocal. I'm not just buying always the cheapest, most speculative names in my portfolio. That would be really silly. 50% of my portfolio is in the most expensive stock in the entire stock market. Not because I like expensive names and I don't want 50% of my portfolio to go anywhere, but because I've built it out so much, it's ran so much, and I've got big belief in artificial intelligence, but there's also a ton of security with owning one of the biggest names in the market. Hey, Tanner, any concerns about a looming recession? There's always a looming recession. Okay. So no, I'm not worried. People always say this. If I did a video a long, long time ago about this, but if you type in like not 2008, not 2009, but like 2010 articles about recession, 2011 articles about recession, and then go through the years all the way from 2010 to 2020, how many people said impending doom? These are all the reports that came out during this time to show off why you guys need to get out of the market and sell your stocks. And if you had picked any of those times, you would have been a sucker and lost out on opportunity of buying and holding great companies that continue to expand their advantages in US markets and abroad, by the way. That's one of the great things about tech positions as well. It's not that you're just buying US companies. You're buying companies that essentially are so global that even whenever the US consumer is, potentially weaker, like for Google, I mean, they have customers in 200 countries. I mean, they're just unbelievably global, right? So it really does help to buy some of the bigger tech names because you are buying essentially small countries worth of fast-growing businesses. Are you worried about BRICS and de-dollarization? No. That's also why I'm a better on Ethereum and these sort of things, is that I think that Ethereum actually strengthens the US dollar. Before, it's been very hard for non-US customers, especially in many countries, to go to their local banks, and for which many people not in the United States are underserved or unbanked completely. Okay? Meaning, if you ever hear underbanked, that means that they don't have access to credit. Maybe they can put their money in a checking account, but they don't have access to like leverage or any form of real credit. And then unbanked is just you don't have a checking account. They won't see you because you don't make enough. And that's for a lot of people globally. And for many people in different countries, they either worry about their dollar and destabilization in their country, and they really want US dollars. But the banks don't serve that purpose to small consumers. Maybe they do to the ultra wealthy of those countries, but being someone that has a few $1,000s in their bank account to go, hey, I want to have US dollars as a safe haven away from my currency. Good luck going to your bank and getting that set up. That's potentially not even a product that they offer in many, many, many countries. What stablecoins has allowed that as long as you have an internet connection, you can set up a wallet and buy US dollars via USDC, Tether, what have you, PYUSD, and gain access to US dollars anywhere in the world without any permission. Okay? It's an unbelievable way for US dollars to be minted and held in non-US hands for the purpose of stability without, completely permissionless. So love Ethereum for that reason. It's another reason why I like payments. It's going to help with security, help with costs and settlement times. And it's, completely global. Is Circle the stock of the future then? $100 to $1,000? First, a public. I personally would just prefer to hold onto Coinbase, as they are, a co-founder of Circle. They take a large percentage of their earnings that has been ran through Coinbase. And then you get all the other benefits of having a company that's building a real business, that's profitable, that's very tech forward, A+ engineering team. So I'm sure Circle will do great. And there's some concerns I have about that regardless about, what's the difference between different stablecoin companies as long as they're regulated in the United States. But I do think that stablecoins are good for the United States, and I do think that Coinbase is well positioned. Did Tanner buy BM&R? I spaced out and didn't hear that part. Ladies and gentlemen, I need to speak up for the people not listening. I own SBET, okay, Sharplink Gaming, and BM&R. More BM&R than I do SBET. Yes, I bought BM&R. Jeez, stop asking. Okay, let's see what else. DLocal or Nubank? Thanks, Tanner. Josh, right now I hold a lot more Nubank than I do DLocal. Maybe that might change. Obviously, DLocal is an extremely fast grower, but Nubank is such an area that I understand. I'd like to think I know payments to some degree, but I really understand like fintech and neobanks because that's what SoFi has taught me throughout the years, and Nubank is essentially that. There's some differences in the way that they don't put their loans up for sale and they house them all on their own books, and it's a very different market, but a lot of the lessons do cross over. So I prefer to hold Nubank a lot more in my portfolio and continue to hold a lot in my portfolio. What's SBET? I clearly specified Sharplink Gaming so you could look it up. I just want to some of the listeners. Oh my gosh. What's Sharp Point Gaming? I'm gonna flip my table. I don't know who taught you guys to be the best trolls on the internet, but I'm turning red. I'm trying to give good advice here. Okay. Not even advice. I'm just trying to be transparent is what I meant to say. What's the table? Okay. People are messing with you. Fully aware. Fully aware. I'm also having fun. Okay, let's see. Do you have a timeline? Okay. DuoCon 2025, we just showed that off today. I mean, did anyone like that meeting? Did anyone enjoy it? They came out and they said, hey, we did a partnership with LinkedIn. And honestly, someone in my chat said, hey, but aren't people just going to cheat this? Like, if it actually becomes a real certification that might get people new jobs, aren't people just going to put all their Duolingo answers through ChatGPT or something if it's like not just a learning thing, but like true qualification to get a job? So standardization, standard testing on Duolingo, very interesting. The LinkedIn partnership I thought was great. I hope that they do it with Indeed, with Glassdoor, with so many of the other job businesses. It's the exact same thing of like the Robinhood verification on trades, right? It allows a employer to go in and verify that you do speak this language and you're not just putting it in your resume, for the sake of it. Could it be, cheated in some way? I mean, sure. But then the same verification that you would have, not just putting it in your resume, but also checked whenever you get the job, is probably what's going to happen if you falsify your Duolingo score. BM&R. By the way, did you buy? I did. JS, thank you so much for the donation. We'll put BM&R in the portfolio. Also, Harry Garcia, I completely skipped your donation. Didn't see it come up during the last stream, but we did put it in the community portfolio. So thank you so much for the donation. Add SoFi to the community fund ahead of Fed rate cut. Also, answer my previous super chat question. This one, sorry. Will SoFi 3.8 APY come down from tomorrow's rate cut? Most likely. Most likely. So SoFi's been a little bit weird. Sometimes they front run rate cut decisions. Sometimes they have done it a little bit afterwards. So maybe it doesn't come for 2 more weeks, but the likelihood is that they will end up cutting. So will Robinhood. So will many of the other businesses. Piyush, thank you so much. I will add SoFi. Let me just screenshot this thing. Thank you so much for the donation. Have you ever given thought to DoorDash? No, I have not. But isn't it like a $100 billion business? I thought I heard someone talk about it and say like it was like $100 billion or something. Isn't it Dash? $112 billion company. I mean, what's going on at DoorDash? 144 PE. I've used DoorDash once. It was unbelievably terrible. Got scammed out of my money and rated them 1 star. They didn't help at all. And then I freaking deleted the app. It was the worst experience. I'm not saying that I'm fully aware, you know, even the companies that I love the most, even Apple, who like makes a great product, there's going to be times where people have a bad experience with businesses. Maybe I got extremely unlucky. But my experience sucked. It was terrible. I remember like they like ripped me off from like $40, $50. They gave me something I couldn't eat. And then they were like, we can offer you a $5 coupon. I was like, huh? Give me my money back. You stole money from me. How are you vetting these people that are delivering me not what I ordered? Go steal it from the restaurant that didn't deliver the right order. Like, I don't know. I was just blown away by the experience. So I'm an Uber guy. Speaking of which, Tesla does, I mean, Elon Musk has been very certain, hey, we are not partnering with Uber. Said it multiple times, even said he's gotten questionnaire like, hey, you know, are you going to buy Uber then, you know, potentially take advantage of the existing market that they have? He said, why would we need to do that? Like we already have our own thing going. You know, we're never going to partner with Uber. Ladies and gentlemen, Tesla and Uber have just partnered. Not exactly, okay? But it's Uber Freight. Uber Freight partners with Tesla to create dedicated EV fleet acceleration program. Aims to drive electric semi adoption following successful completion of its 2-month pilot program. Now, I think this is actually a good idea. But Uber Freight and Tesla, I thought it was quite the funny thing to say after so many times that he had talked about never partnering with Uber and how it's going to be a dead business and everything. Taking advantage of the partnership well, I guess Tesla, or well, Uber is still strong. Sent from Hunter Biden's laptop, no rate cuts, might even hike, LOL. You sent me $2 so then you could troll on my app. I mean, I'll take it. Keep sending them. But yeah, I don't believe you. I'll take the other side of that. I think we get a 25 basis point cut. Get some Navitas. Any news / hope on SoFi offering a business checking account? I am saddened by the fact that Anthony Noto had not said anything along the lines whenever they were talking about the product like roadmap that SMBs was not a part of it. It's been something that had been highlighted in the past that we have not seen anything in the future. Hopefully that changes. I think that would be a big case for them going forward. But yeah. Also, guys, I tweeted out today, and people are bashing what I tweeted because I said I called an electrician. They're like, you need an electrician to cut holes in your wall, loser? Yeah. I don't know if you guys see my hands. These are soft as ever. I mean, I'm going to pick up my kid one day. They're going to think mom just picked him up. I mean, I've got soft hands, but I do stocks for a living. Like, what do you want from me? I'm not just on, off on my off time, just playing with sandpaper. I mean, I got soft hands. Okay. My girlfriend doesn't seem to care. Whatever. So I know I've lagged in some of my live streams recently. That will not happen anymore. Okay? I called an electrician. I know they're not my internet service provider will not run cables through my walls. So whenever I bought this house, it was on Cat 5. We upgraded it to Cat 7. Please, someone who works for an internet provider, explain to me how I'm paying for 2.5 gigabits a second and I'm only getting 932 megabits a second. Someone explain that to me, because I feel like I'm getting scammed. I run Cat 7, so that should do 10 gigabits a second. I don't know. Why do you have soft hands? I just don't. Don't you work out? Oh, well, I mean, you could see calluses there, but honestly, sometimes I just, you kind of itch them off sometimes. I got a little bit of hyperhidrosis, so I've always got little clammy hands. Sorry for the people that want to shake my hand. I apologize. Any bottleneck? I don't know. SR, you explain to me. I'm not the internet guy. Check your hardware capabilities. So it could be my computer that doesn't want to take a gig. Is that what you're saying? I spend a lot on this computer. If this thing whatever. What's the point of even offer? That wasn't even the internet provider didn't even be like, hey, do you want to get our top tier at 2.5 gigabits a second? They also have a 10 gigabits a second. Who's that for? This is just people that run their own servers at home for what? What's your Wi-Fi card? Well, it's not Wi-Fi. I'm plugged in now. That's why I need the electrician to cut holes in my wall and run cable through. But some Asus card or something like this. Someone DM me afterwards. Tell me what I'm doing wrong. Wow, there's so many computer guys. You guys are making fun of my soft hands, and all you guys are it's your network connection. You have a bad card, and you guys are losers too. Okay. Your motherboard probably has a 1 gigabit Ethernet jack, or switch at your router probably only has 1 gig. I mean, that would blow me away if my router only had 1 gig. They just sold, the same people that set it up just sold me 2.5 gigs. Crazy. Hey, buddy, any thoughts about Open? I bought some today for 3 weeks. Could you please take a look? Thank you. There's nothing to look for me on Opendoor. I mean, no one is buying it for the fundamental numbers right now. If Kaz can come in and Keith Raboy and Eric Wu can come in and completely turn around the business, great. Okay, I'm gonna love that. But right now, I don't have any. There was something that ended up Kaz ended up putting out today, and talking about how what's his at? Isn't it Canada Kaz or something? Canada Kaz. Yes. Okay. He said, we're going to launch Opendoor everywhere in the lower 48 states in the US in the next couple of months. We're only available in 50 markets right now. I mean, okay, but are you why haven't you done that before? I would assume that there's a lot of underwriting capabilities of just taking any house in any market. You need to somehow understand the comps of the markets that you're in, and that's how you slowly roll out. So I think the entire new team can either, one, really turn this around, make this 100x turnaround and actually make it into what people believed it could be, which is a generational change, truly disruptive technology in the real estate market, or they're going to immediately blow it up by completely overpricing or, overbuying properties that are not going to sell later on, doing crazy hack jobs because they're hiring contractors that do not care about the types of work that they do for Opendoor as long as they get a check, which is, from what I've seen, historically what they've done for Opendoor properties. We'll see. The Nvidia GPU is the issue. Get out of here. Get out of here. Okay. Got a 5080. I'm doing fine. If for next quarter Nvidia goes up, by the way, that was me. Not that I bought the stock, I bought the product. It raised it up. I mean, $4 trillion companies still need sales. I'm helping. Shkreli shorting Opendoor. Guy usually doesn't miss. I mean, no, Shkreli might be doing well, but his last short was Quantum, and that's sure, I don't know. He missed pretty hard. Like, I just wouldn't short things. Shorting is so scary, in my opinion. It's just not it's not the greatest idea, in my opinion. Yeah. Will SoFi have a dividend in the future? I would like to think so, but I would also like to think that it's probably 10 years out. I'd like to see buybacks before we see dividends. And then maybe a tiny dividend in the future for value investors and dividend players to, put those growth stocks in their portfolios, just if they're objective-based ETFs, but not actually trying to hunt a dividend. I don't care too much about that. Shorting is dumb unless you have information other people don't, and that's a felony. It's not a felony to have information that other people don't. It's just how you acquired that information. If you go do your own due diligence and go find that information, that's not illegal. But if you're going to the CEO and you're, meeting with him on, like, I don't know, he's your cousin's wife or husband or whatever, and then you're meeting with him on Thanksgiving and being like, hey, what's the scoop? Oh, haha, we're a dying business, but we're not telling anyone. Speaking of which, that actually brings me to something that people are talking a lot about recently, which is the United States going towards something closer to 6-month reporting like what we have in the EU rather than quarterly reports? Now, a lot of people are frustrated with this. Some people understand the bull side as well. I can see both sides, okay? People are talking about the price of reporting, quarterly. I understand that. There's a cost to reporting. But some people say, oh, well, this forces their business into having to show off on a quarterly basis. No one's forcing you to do anything, okay? You want to do that because that's the result that, is pumping your stock. But if you want to focus more long-term, you can just tell your investors, hey, we're focused long-term. Nubank did this, Costco did it. Many companies have said, hey, I don't care what you think about these quarterly reports. We're focused on the long-term. So that's not part of having to post a 10Q or a 10K, is that you're focused on 3-month increments, okay? That's completely investor biased. But the same thing that I highlighted in this tweet is that, they're required to show off 10Qs and 10Ks to the market. They do not have to do press releases, presentations, earnings calls, Q&As, investor days, product days, institutional meetings, or even supplemental material on top of that, okay? They do that because the people who do show more transparency end up seeing better investment results. That's why that trend appears, okay? So even if the basis is to report on a 6-month basis, by the way, Nubank only has to report every 6 months because they're in LATAM, they're in Brazil. But they report on a 3-month basis because they're aware that that transparency will do the stock better. Now, they're still long-term based, but they do it because they need to do it because investors wouldn't be happy if they did it on a 6-month basis. Even Adyen, which reports on a 6-month basis, is now reporting quarterly to show the numbers in between. Not like they have to report it to the SEC, but they have to just show it to us, retail and institutional investors, because that's what we want to see. Some companies go above and beyond with monthly auto sales, retail sales for like Costco, or what's the trading volume on a monthly basis for Robinhood. So companies go even above and beyond because that's what's actually done well for their stock. So the 6-month basis thing, I think if it does go into law, I'm not sure that a bunch of companies would do it. And the companies that I think would do it, like JP Morgan and these sort of companies that are like just super focused on, like just the companies with zero communication, I don't hold those anyway. And I've done very well picking companies that have a ton of transparency and disclosure as well. So perfectly fine with buying the companies that are going to stay to a 3-month reporting basis. We'll see what happens. I mean, I definitely think that it could end up changing, but I think that that's bad for retail. It's not institutions that are going to, suffer. They pay insane amounts of money to get real credit card data so they can see if people like what they're buying from what realtor or retailer and everything along these lines. Like they see real-time information come in from credit card companies, and Bloomberg will supply that information. Okay. That's great. Retail is the one suffering because we have to go by the reports, the Q&As, the what do you call them? Interviews and stuff like this that they do online with podcasters and everything. The reason why that's becoming popular is because retail feels confident investing in companies that they can touch and feel and not pray and hope between 6-month periods. I mean, that's going to lead to increased fraud. That's going to increase, the large misses. You think companies miss on a 3-month basis? Wait until you miss on a 6-month basis, because a company can say one thing at the end of their earnings call or 10Q at one point. 6 months later, a lot can happen. Entire businesses can fall apart in that time. So I don't agree. Yes, there is increased costs, but I think those increased costs are worth it. You don't want to report? Don't go public. I mean, Stripe's been not going public. They can save all the money that they want, but they're not going to have my capital. Still missing my $30 donation for Joby. Make that 40. Let me know if you need the original order number. Here, I can just check right now. Let me screenshot this. I love how you said order number. That is okay, let's see. September 2nd, right? September 2nd. Tom, I do see it. Late to the stream, who got Tanner worked up? Add 2 shares of Joby to the port. I mean, I feel like I've done that one. If it's not in, I mean, I'll screenshot it regardless, but I'm pretty sure I did end up putting that one in because I remember that. Thank you regardless, though, Tom. I apologize if I did miss it. Thank you so much for the additional donation. Tibby, do you know where Amit gets his Palantir shirts? I want one so bad. I think they're just on the... Don't they have a merch thing online? Get 2 shares of CEP. I don't even know if I... I can't, AV. The market cap of this business is $272 million. I need a company that's over $1 billion market cap. I need $1 billion market cap. Thank you, AV. Let me know which name you want me to put that money towards. And I seriously, I do appreciate all the donations, guys. Been very kind. I'm sure everyone's happy with the SoFi premiums that have been printing on these options. Jeez. Amit was wearing preview merch from the Korea drop. I mean, if you're friends with Emiliano, I guess you get that bonus. It'll be over $1 billion once it closes. When does it close? I mean, we can hold on to it, and once it goes to $1 billion, we can get it then. But yeah, I'm not just because there have been a couple people that have put in things that I've denied under $1 billion. I'm not going to break the rules, but thank you so much. Like I said, when do we get a SoFi merch drop? Like, come on, that's what I want. Okay. Tell me what you guys think about this report. Jeez. Kalshi ended up coming out and saying the amount of searches for quote unquote help with mortgage surpassed the 2008 financial crisis peak for searches. That happened. Now, what I'm about to show you is not completely attributed to Google search itself, but it does highlight the amount of searches that are happening on Google just in general. I mean, it has gone up, okay? From 2008 to today, it's not the same business. We're talking about actual search volume. The amount of people that use Google, way up. There's other businesses in here, fully aware, Google Cloud, YouTube. Many of these businesses have grown a ton since 2008. Many of them not even really a thing. But is help with mortgage as big of a concern today as what it was back then? Now, I spoke with Roy. Roy seems to say that rate cuts is not going to affect mortgages at all. I don't agree. I think they absolutely do affect them. Maybe it's not on a one-to-one basis and that they're not pegged to Fed rates the similar way because it's much longer term rates. But it still does correlate to some degree, right? Rate cuts will help with people's mortgage rates, and mortgages overall have been going down in value because people's long-term perception of U.S. rates is going down. There is SoFi merch. SoFi has socks, hats, t-shirts, and hoodies. Where? $2. Just say AppLoving. I mean, yeah. Pretty freaking amazing. Above $600 today. I think it was $603 was the close. Guys, go back to the earnings call that we just were listening to. I was able to scoop up some shares at $361. I'm not much of a trader myself, but I got to say, I was pretty proud of that price. And, just in the last 3 months, we're up 62%. Even more if you had purchased at a good dip, but unreal. Congratulations to AppLoving shareholders for getting into the S&P 500. And may the future of AppLoving be even brighter once they actually put their product to the public, which it's still very much in an invite-only stage to some degree. SR says, Tanner, what's your t-shirt size? Large. Why? You got me or something? What's going on here? You taking care of me? I'd love to rock a SoFi shirt, but mainly a hat, because this is the majority of the advertising that you guys see is what goes on the head. So I'll see what I can do. Yeah, Anthony Noto might stop you, but I would love, during the many conversations that we have about SoFi, to rock just a little bit of gear. I like my Robinhood gear. I love all of them. My Shift4 stuff. Also, you guys want some real advertising? Just get me a tumbler. Like, the amount of water I drink from this Shift4 Stanley is crazy. SR SoFi relations. I got into AppLoving at 225, but got out at 270. Oh no, I was not reading far enough. Yeah, I mean, the goal is to just never sell, isn't it? The goal is just to watch US companies do growth things. ETH to the moon. Yeah, I'm aware that there's SoFi Stadium merch, and I someone had actually offered to send me some, but I don't care about the stadium gear. That's whatever. Yeah, I've seen that. What's the address to send the Tumblr? Yeah, let me write it in chat here real quick. Where do you see SoFi in the next 6 months? Better to go for SoFi options. I'm not a big options guy, so I apologize. But yeah, I do think that we get above $40 a share, probably 45, somewhere around this line. Four reported quarters from now. Okay, so Q3, Q4, Q1, Q2. I think once you guys see that level of data, the market's going to get very excited and put quite the premium on the stock. And I also think I'm being actually decently conservative in those numbers. I don't think that shows much of, too much multiple expansion compared to what you're going to see from some of their peers. Like, that's going to be real growth on members, on revenue, and acceleration of the loan platform business. And yeah. What's the percentage you write covered calls on your shares of the stock? It depends. I mean, on sometimes I've written it on all of my SoFi shares or Robinhood shares. I've never done it with all of my Nvidia, but maybe one day. I'm not that risky just yet. But I also do extremely low deltas. Like, I mean, if I'm doing it on that many, it's probably under like a 0.1 delta or under like 0.15, something like that. I don't even think I've done above, maybe I've done above 0.2 one time, something like this. But like, I don't do 0.6s or something like this that Tevis does. I mean, I don't want to have the headache of rolling or having to sell my shares at any point. So I'm just essentially taking a low dividend on the growth stocks that I feel like will appreciate regardless. But yeah. What delta? Yeah, I just said. I've not looked too much at Tempest AI, and by not too much, I mean I've already given you too much in terms of how much I've looked into it. I've not looked at it really at all, other than the types of investors that have been buying it, like the Pelosi's of the world, and just reading the summaries of the businesses. But yeah, honestly, I'm pretty happy with the names that I hold. I don't know if I need any more right now. Just continue to make a little bit more money and then throw that back into the names that I already know and love. If it's that low, Tanner, probably not worth the edge case risks. I mean, so far it's definitely been worth the risk. I've been able to gain percentages where I wasn't gaining anything before. And yeah, it's definitely worked out so far. And yeah, I don't know. I'm not doing it through earnings. I'm not doing it through key events, stuff like this. Like, yeah. Okay, let's see. Let's get back to some news. I mean, we went through a bunch of stuff. Waymo just highlighted that they've just done 96 million autonomous miles that have been driven for commercial purposes, meaning no one's in the driver's seat. And this is not just them testing the roads. These are real miles. 5x fewer crashes with injuries compared to human drivers. How can you say that's not going to take off? 12x fewer crashes with injuries to pedestrians compared to human drivers. I mean, not to laugh, but like, are we that bad at driving? Waymo's 12x'd us already. So I think that that's going to continue to do well. Nvidia is set to lease 18,000 of its own GPUs back to Lambda. Via Project Comet, Nvidia claims they're using AI internally to design new chips and expand the CUDA platform. Yeah, I mean, Nvidia is going to continue to do these crazy projects like this. We saw one recently with CoreWeave, where essentially they said, "Hey, if you guys have any unsold compute, we'll end up buying it back from you for the next decade." Or I think it was like 20. Yeah, it was either 2032 or 2035, something like this. So Nvidia is just furthering that need for customers to continue to buy their products, but they also need them being their own, one of the largest companies in the world. So talk about a product that's so useful that you are also a large consumer of your own product. Absolutely amazing. Nvidia also reported this little piece on their newsroom that I thought was just quite interesting. None of these are extreme needle movers, but it's just a death by 1,000 cuts at this point for a for nearly $5 trillion business. Accelerating the UK's AI goals, CoreWeave, Microsoft, Nscale, OpenAI, and Nvidia are building the nation's AI infrastructure by adding 120,000 GPUs to national data centers, making it the largest AI infrastructure rollout in the country's history. The United Kingdom is building the infrastructure for AI industrial revolution, said Jensen Huang, Nvidia CEO. Death by 1,000 paper cuts. I'm going to continue to highlight those as they come in. There's not going to be too many deals other than the ones that OpenAI is able to do, Meta, stuff like this, that are going to be insane needle movers. But CapEx from, the largest brands in the world, largest companies in the world, continues to increase, even as a percentage of the amount of revenue that they're actually making, which is just insane. It's furthering their, belief in artificial intelligence. And for me, still, I believe that the massive or the largest winner will be NVIDIA data centers, currently on GB300 now, but eventually for the Vera Rubin platform. Okay, let's see here. Tanner, are you buying Shift4 if it gets down to the $83 range, aka where Jared purchasing heavy? I mean, yeah, it might be a good opportunity to explore DCAing in there. Yeah, I mean, we'd need to see another quarter, maybe a little bit more of a successful quarter than what we've seen previously. But I could definitely end up purchasing more Shift4. I think people got a little bit shook with the Global Blue acquisition. It's just such a large purchase. It needs to work. So if they can show to the market that they can do exactly what they've done with, every other M&A deal that they've done, but at a much larger scale, I think that's an exciting feat. And then I would buy more. But I think I'm able to wait to see quarterly results. Or if, Trump gets what he wants, the 6-month or semi-annual results that we are looking for. Will rate cuts have positive or negative impacts on markets? So here's a fun study. We can, where did I save this report? Let me just quickly bring it up for you guys if you haven't seen this. Give me one quick second, because I need to find where this was. Fun facts for you. 2025 will be the third year since 1996 with a rate cut, while the S&P is at record highs. Same thing. Since 1980s, the Fed has cut rates 20 times with the S&P 500 within 2% of its all-time highs. 100% of those rate cuts since 1980 with the S&P at record highs has led to more record highs 12 months later. 100% of the time, it's led to higher highs. Am I worried, as you said, that rate cuts are going to impact markets negatively? The answer is clearly no. How do I know this? Well, the data points to 100% of the time they go even higher. Not saying it's a guarantee, but that's some pretty good data. Rate cuts are coming amid the AI revolution, the biggest technological revolution since the 1990s. The 1996 rate cut with the S&P 500 at all-time highs led to a 22% rally in 12 months. Wednesday will mark the first Fed rate cut in 30 plus years, with PCE inflation at or above 2.9%. The Fed is about to add rocket fuel to the AI revolution. Crazy. Absolutely crazy. So yes, I continue as my biggest theme across my entire portfolio be in artificial intelligence, as even Tom Lee has said, that the biggest benefactors will be the Mag 7 and the AI names. And then as sort of the next big benefactor, we have small caps and financials. For me, I like playing the financials and fintech in general, boosted up by artificial intelligence and blockchain revolution. But then also, by far, the biggest parts of my portfolio are made up of some huge tech names, meaning all the way at the top at Nvidia, and then also playing Amazon, Google, and the likes like that. So big, yes. Excited, yeah. Josh says, let's go. Josh, how does it feel? What does your portfolio look like these days with SoFi above $27.40? What will it look like if we actually open up tomorrow, like what we almost opened up today at 28? How long until we close SoFi above its all-time highs? Do we need to see that 25 basis point cut? He said 8.3. Guys, that's not $8.3. He's talking about $8.3 million in SoFi stock. That's what Josh is highlighting right here. I've seen his portfolio with my eyes, but back whenever I checked, it was like 5 or 6 million or something. 8.3 million now. Friday's a quad witching? Oh, I didn't know that. All right. All right. Well, we'll keep an eye out on that. I won't do a bunch of trading through Friday. None of your business says retracement coming. I mean, maybe, but there's been more money lost trying to look for those retracements than has been just holding through them. Retracements happen. We just saw one like not too long ago. What happened? Like SoFi dropped by like 10% or maybe even a little less, and then it's skyrocketed back up. And during that dip, everyone said, I told you so, I told you so, I told you so, and now they're all quiet again and my DMs are free. And it's actually not DMs. No one talks crap in my DMs. They all just want to say it publicly so they can get a one-up. And then back whenever it shoots past where they were, quote unquote, oh, now it's going back to 10, they lose all that opportunity. And honestly, Matt, it's hard to feel that bullish, but I'm honestly on that trend. Like, I do think that there's more opportunity. If there's more artificial intelligence opportunities to be made, like stablecoins barely rolled out, I think companies have more operating leverage to find. Cut out the manual work and increase the amount of automated work and focus on the things that humans are actually better at doing than plugging work into spreadsheets. Now, that means that I'm going to be half out of a job, right? If the people on spreadsheets are not going to be as useful, that takes away like 80% of what I do here. But the other 20% is my own capital. And that's how I'm going to defend myself against artificial intelligence, is that regardless of what business it is and how automated it is, it's still going to need money. Whether that's to set up chips, to buy tokens from some chip supplier or something like this. I mean, not chip supplier, I mean cloud provider. So one of the great things and why I think investing is going to continue not only do well, but continue as a percentage of the overall, US households percent, like of people participating in US markets is because, like, regardless of what business you're in, you need money. Okay? There's going to be a continuous pour in, I think, of the stock market. Not saying that we're not going to have cracks, downplays, things that come out where people get scared of the data, everything like this. But I am more closely tied to the belief from Tom Lee that we're in a bull case through 2035. I know that sounds crazy, but historically, that's what happens. Bull case, or bull runs usually last 7 to 10 years. The last one that we saw was 12 years. It was very historical, and now we're in another one because we went through that 2 years of bull crap, and that's usually the time frame that we see a bull or bear market in as well. Not saying we're not going to see corrections throughout that period, but are we going to see, bear markets or real collapses in the market? I don't believe it. Are you going to buy the dip if we see red tomorrow? I mean, it depends on what companies do dip, but yeah, I'm a net buyer of stocks. I will be picking up shares. I couldn't tell you which one though. Spicy Tanner. Adding to the names, Amit is. It's not Timeline Tanner. It's not Testy Tanner. It's Spicy Tanner. There were a lot of names that went out yesterday. And I'm not here to just pump people's positions. I mean, I do think like individual companies, you'll still need to pick the winners. There's still way more work to be done, to make money in markets. And people will feel like because they made money in certain markets that they'll go leveraged or put expiry dates on their positions to increase their total return. And people will still get wiped out. Like that's going to happen. But, overall, I think equities go up. Look at the markets, like stocks go up. And education's furthering people's awareness into US markets. And then tokenizing assets, even through Ethereum, not only like talk about multiple expansion, awareness into someone's stock, S&P 500, these sort of things force multiples for companies to go up because there's more buyers of those companies. Imagine what happens whenever companies start to get tokenized and they're not just getting purchased by US individuals or North American individuals for the most part, which, you're talking about just north of 400 million people, but instead you're getting purchased from people all throughout Europe, Africa, Asia, LATAM, all over the world. Okay. And they are wanting to buy US companies because really anyone around the world understands that they want to buy the companies that are in first place. I talk all the time about buying the first place names, not the second place names, and you're willing to pay a premium for that. There's a lot of investors all throughout the world that see the markets the same way. Why buy this homegrown tech startup whenever you could buy Microsoft? And tokenized assets will allow for more international money to find its way onto US markets, increasing liquidity and increasing multiples if people are feeling extremely bullish. So get ready for, potentially even higher multiples than what we've seen previously. People also talk about this too. People point out the S&P Shiller index to me. S&P 500 Shiller PE. Okay. People point this out to me a lot too. Let's do a zoom. And they say, hey, the last times that we've been this high is things like 1999 or 2000 or 1929. This is the Great Depression. We are getting pretty high. We're going to crash and it's going to look as bad as it did before, But, 2007, 2008, we didn't really spike that high. So it doesn't correlate to every crash. It just happens to correlate with really large crashes. If you just look at this chart, this looks scary. Okay, this is the S&P 500 Shiller PE. The problem is what it doesn't show you is what's the cash balances of these businesses? What are the margins of these businesses? What's the, geographical stranglehold that these companies have? And the S&P 500 was such worse quality. Imagine what the S&P 500 looked like in or even 2001. I mean, these were not as good quality businesses. Now we have companies that are pouring in free cash flow, have huge cash balances, big dividend buyback, buyback programs and dividends. Like, the qualities of these businesses are nothing like what we've seen. They're completely international, have currencies in many, many different countries, businesses all across the world, and they're tech based, meaning that they're all running on one unified platform in certain large, like for many Meg 7 businesses, Meta, Google, these sort of companies. It's nothing like what we've seen back in 1929 or 2000, 2001. 2001, the companies that were skyrocketing up were making no profits. It's nothing like today. So yes, we're seeing a multiple, but the quality of the businesses are worth so much more. The cash on hand, the lack of debt is so much different. Deregulation is still undervalued. I completely agree. There's so much left to go, and people are not, I think, accounting for how much deregulation allows companies to just do what they have to do in order to acquire more users, stuff like this, without harming individuals. It's not like we're bringing back, like, child labor laws are going away. That's not what people are advocating for. People are advocating for, hey, how about we don't have to file 400 businesses before we go into this area, or set up this new business, or acquire this new startup that's coming in that has zero chance of trying to compete with us. We're just going to give them capital and a real user base to apply their products. But if we do that, we want the upside as well. We're not trying to bring back 9-year-olds working for, $2 a day or whatever. That's not the, like, people have learned from that. Yeah. Exactly. We could build a lot of houses if they would let us. Yeah. That's what I think it more aligns with. Or at least the way that I think of deregulation. These are the types of things that I'd like to see. How do you feel about the proposed 6-month earnings report deal? So I did talk about this stream, but essentially, I think even if it is implemented, companies won't necessarily follow it. We do a lot more than what's required of us. Many businesses show off investor days and product days and show off monthly statistics and everything because they realize that the thing that is giving them a multiple is their transparency. So, yeah, even if it is implemented, I still think companies will not follow that and show a lot more than what's needed. Deregulation, not so good in the form of reducing reporting requirements. Yeah, but then companies, like, even that I'm okay with, because companies will need to realize that they're not getting a multiple because the SEC is making them report gap statistics. Why do they show off segment level KPIs and everything like this? Why do they show off adjusted numbers to really inform investors on how they should learn to value these businesses? It's not always true. Some fraudsters might use adjusted numbers or adjusted EBITDA to show off BS, but to a great extent, many of the companies that do show off adjusted metrics are saying, hey, we had a one-time expense. This is never going to happen again. This is not a great way to, value this quarter. This is just because we went public and we had this huge funding round. So we're going to have a massive loss here, something along these lines. Or there's massive stock-based compensation that we had to pay out because we just went public for the first time. We didn't just lose billions of dollars. Our actual, fundamental business actually improved margins. So this is what it looks like on an adjusted net income basis. That's not required by the SEC. So deregulation can allow companies to, not report over a quarterly basis, instead 6-month basis, making sure that fraud still doesn't happen, whatever. But it's not going to stop companies from doing interviews, doing investor days, product days, showing off investor presentations, doing Q&As. And if they don't do that, then they're going to miss out on my money. They're going to miss out on a lot of retail money. And retail money makes up for a large percentage and a growing percentage of, the amount of money that's flowing through markets today. Now, Another thing that I did think about is what does this do for companies like Robinhood, where they see huge spikes in volume during those earnings presentations? Will that slow down? I mean, yes, but is Meta going to stop showing off? Like, I mean, they got, Meta Connect tomorrow. I don't know if that's uh like they're still going to see huge volume tomorrow. It's not going to change anything. But what percentage of people are trading JP Morgan on Robinhood? I'm not sure. Because I think the big banks and stuff like this, the people that are doing that, they will only show off on a 6-month basis. But yeah. Do you own SoFi? I think I do. That's a joke. I mean, I've been making straight SoFi videos for 4 years. Of course. It's my third largest position. What do you say to someone who thinks ETFs are better than buying individual stocks because history shows that's the only way to win? My buddy is missing out trying to get him to buy individual stocks. I mean, tell him good luck or show him your portfolio. Like, I don't know. Like, there's a bunch of people that say, oh, yeah, you can't beat the S&P 500. It's like, just take a look. Like, that, if you would have bought these companies over this period, I don't know. I think people can be missing out, but if he's not going to have the time or your buddy's not going to have the time to look into all the earnings data and put the time that's needed in order to be an individual investor and buy individual equities, it's probably best that he is in ETFs. I mean, I'm not an anti-ETF guy. So I think I'm more being the devil on your shoulder that you want me to be, which is to just give you the confirmation. But I think people who buy ETFs is perfectly fine because not everyone has that time. I think for people that especially have smaller portfolios, it's probably not best for you to manage 10 grand or 30 grand, something like this. It's like, no, if you actually put all those hours into your career, you're going to make way more money advancing your career and doubling your earnings than you are going to trying to make 20, 30% on, 10 grand or something. So, yeah. Not anti people having smaller position. I mean, get started as early as you can, but the more you manage it, like, I don't know if you're going to see the same results as just furthering your career and trying to get certificates or whatever you can to push that way. Okay, let's see here. I've 5x the S&P year to date. Paul, congratulations. I mean, there's been a lot of companies that retail has been on top of that have just dominated over the last, 24 months or so. Absolutely dominated. And it's been a wild ride. Do you like DLocal, Tanner? Yes, I do. Tom Lee says banks are now tech companies, massive technology changes needed, and those that lag will lose. Yeah. Yeah, I believe that. I took 20,000 to 350,000 in 2 years. No options. I mean, hey, Patrick, that's insane, man. Congratulations. Okay. Biggest regret was selling 1,000 Hood shares with a low tens average at $19. Still made money, but I never grabbed more. ETFs are better for set and forget. ETFs are better for set and forget yes, my portfolio, I do really try to not sell my positions. And I think the hardest thing with individual investing is just the amount of criticism that you're going to get, especially if you're publicizing what you're doing. So many people can give good arguments as to, SoFi's products don't look as good as Robinhood's for this, and that. I mean, yeah, that looks That looks right. I mean, I like the interface of hoods more, but that's not what made the winning, or that's not like, that didn't stop SoFi from moving, because people need to realize how big the markets are. That's hard to fathom, right? Is just how many customers are in the United States alone. Or, look at a specific metric, or, hey, free cash flow, or this specific metric, CapEx per revenue. The last time CapEx per revenue got this high back in 2001, everything died. Okay, but that was during that time. And it didn't die because of that metric. It actually died because of another metric, but you're correlating two things that don't have anything to do with one another. So it's very hard whenever there's so many different sets of data. People try to correlate data with certain outcomes whenever they're not related. They just happen to be the case. So yeah, investing in individual equities is a lot of guts, and sticking with what you know, but also not being blind to new data that we're seeing. And a lot of that contradicts each other, and you just have to, keep going, I guess. Learn. Did you already make a local video thesis, or are you planning to? Yeah, if you go to my live streams, there was a stream that I put out just a few days ago, saying this stock I'm going to buy on Monday, and that was DLocal. And I did buy it on Monday. I don't know if JD is continuing the troll, or if he's new to the stream. I can't see either way. I don't know. I am a shareholder of BMNR. Yes, Josh, completely. My biggest losers as well are also early sells. Early sells have decimated, including Nvidia. I've trimmed a lot of my portfolio on Nvidia on the way up, and looking back at how much money that would have been can be hard. But what am I going to do? I can't reverse time, so we go on. And I've purchased a lot of Nvidia at much higher prices than what I've sold it at previously. But some people get stuck in that as well, where they have made a mistake on a name, or they've gotten burnt for a name. They go, oh, you know what? I sold SoFi at 10, so I'll never touch it at 20, even if you believe it's going to 30. That can hurt people. I feel like it's easier than ever because of YouTube and people like you who break it down for guys like me. So thank you. You've helped me make a lot of money. More people need to watch YouTube. LOL. I mean, hey, I'm a Google investor, so I'll have more people watch YouTube. That doesn't bother me. Thank you for the donation. But honestly, a lot of people need to give more credit to themselves. It's hard to buy stocks, and yeah, I do appreciate all the love that you guys give, but a lot of people stuck through whenever things were going down. Whenever I was talking about SoFi at 9 and then it fell to 4, that was not a good feeling. That was a terrible feeling, and I had to constantly try to say why I don't believe that things are falling through, and why the KPIs look all right, but the stock is going a different direction. By the way, there were so many comments of people, whether you're here or not, I don't know, that had sold during those times, said, hey, you know what? Enough is enough. I'm aware that this is a good company, but like the stock is clearly broken, and I have to get out. Maybe you took that money and you bought Robinhood, or maybe Opendoor at 50 cents. Like, I don't know where you put that money. So maybe you did even better. But, if I could pour one out to you, sorry you missed the train. You got to stay strong. Joy Luna has been here forever. I've been here for years with you and SoFi. I honestly think you were here like whenever I had like 500 subscribers. And you're like one of the earliest names that I do remember in my chat. So thank you for being here. Honestly, you've changed my life. Okay. let's continue on. You know what's so funny? Robinhood ended up posting yesterday about their new Robinhood ventures. SoFi couldn't even handle themselves. They had to repost. SoFi Invest has expanded your access to venture-backed privately held companies through asset managing firms like Cashmere Fund, Liberty Street Advisors, and Fundrise. You can find this today. You don't need to go anywhere else. We have you covered. So I thought that was really funny. And they do. I mean, they have privately held funds, not just one fund that is coming soon, but many, many different companies, individual equities, private credit, real estate, many growth companies, even what you can see on screen here, like Fundrise is betting on Databricks, OpenAI, Anthropic, Anduril, Canva. That is a stacked portfolio right here from Fundrise. And only a minimum of $10 is actually crazy for these private businesses. Some of them are minimum $25K, right? That's usually quite the norm. Minimum of $10 to buy OpenAI and Anthropic. I mean, I'd buy that in a heartbeat. Sorry. No. Don't follow that advice. I think buying AI would do all right for my portfolio. Tanner, been here forever as well. Freddie, yes, you have. Thank you for being here. Honestly, you guys really have changed my life. It's unreal. I've got the best job in the world now because of you guys. And hopefully we can continue to make great picks going forward. But the funny thing is hopefully, if all goes well, with just the aspect of investing, it's like Warren Buffett buying Coca-Cola. Maybe I got it right in 2022 or 2021 with SoFi, but hopefully, if all goes right, I'll still be talking about SoFi in 2042, just as happy as I am today. And that's the great thing about compounding, right? More users, more profits, right options all the way up. It's the greatest game in the world. What'd you do before YouTube? I was actually a financial advisor. But nothing I say here is financial advice. But for the clients that I did have, those were, I was giving financial advice to them. Yeah. I have a wall of canvas paintings of CEOs, a collage, that made me a lot of cheddar. I call it the wall of CEOs. Bug you if your face went up? Would it bug me? No. That would be crazy. You definitely don't have to. I mean, there's nowhere where I belong on that wall with the CEOs of some of the greatest companies in the world. Thank you, though. That's unreal. If you do, please DM me. I want to see it. But yeah. What made you quit? Nvidia? I mean, yeah, essentially. Yeah, I saw a long road ahead. Had more fun doing this, but enough to, not have to go to work anymore and do stuff like that. So, yeah, I want more. I'm not like settled and be like, oh, my portfolio is big enough where I'm not, I'm not doing that great, but enough where I get to do what I want to do. And my girlfriend has started her own business afterwards as well. So we're both just trying to do our own thing, start a family, these sort of things, and live life the way that we want to live in. And we're lucky enough to do that. And yeah. Are your ex-colleagues still there? Of course. Yeah. Also, it scared the crap out of me that I just saw where AI was going, and I was like, man, my job's going to get eaten up. Like, I will be gone. So was not a fan. Either I got eaten up, or the take rate on the products that we were giving out was going to go down because it would be so easy to replicate. So I didn't see a life there. Yeah, Daniel, I mean, this is exactly why, investing like super early days, like it's great. That's where you learn all the lessons. But in terms of like trying to hope for capital appreciation whenever you have like very little money in those accounts, like most of the portfolio gains is just going to be from you funding them, because you're going to make a lot more from your actual job. But the mistakes that you make there are hopefully hundreds of dollar mistakes or a few grand, rather than, a couple $100,000 or something like this, where you really are like losing your shirt on mistakes. And so that's the great part. But congratulations. I mean, it's unreal what SoFi has done for you, going up to 60K. That's insane. Maybe it's too personal, but is there a way that this community can support your girlfriend's new business? Not really, no, unfortunately. But thank you, Joshua. Do appreciate you guys wanting to support so much. I mean, it's mind blowing. But without giving anything away, no, I can't really say anything. But no, there's not a way. Yeah. When will you have Tim Sweeney back on? Oh, I'm sure probably very soon. Probably on like a, Fintech Friday show or something like this with all the other guys to come on and talk about SoFi. Maybe we'll do some sort of special $30 stream. I was also thinking about doing like a Toronto meetup at the $30 range. Maybe we could do something there. I think that might be fun. I need to call like a venue or bar or something to get something booked out. But yeah, I think that would be a lot of fun. Also, I heard from somebody that I might be going to Nvidia GTC next month. Maybe meet the old Jensen Huang. That could be quite exciting, eh? Maybe we can get a little short video from him. I'm sure we're not getting a long-term a long-term video from him. We got a long way to go there, but that would be insane. Jensen, in terms of a CEO that's made me more money than anyone else, by far, he has done more for my portfolio than anyone. And so that would be very cool to meet him. And I'm sure he hears it all the time from people that obviously his work has not only made him very rich, but, potentially thousands or millions of people very rich. It's got to be a cool feeling in life to do the right thing. What's Anthony Noto's 3 things? I always think about this sometimes whenever I'm, and I often forget it. Work hard. He's got 3 pillars of how he lives his life. Work way too hard, help others, and do the right thing. I think that's the 3. If you know you're doing the right work, you're not doing something that's shady, you're not doing something to harm others or to get one over on someone else, you're trying your absolute hardest to do that. And then along the way, you're stopping to help other people also achieve that similar goal. If that can bring you, or if there's one thing that Anthony Noto said, like that's brought him in his life a lot of satisfaction. So hopefully people try to ascribe to that. And I will also try to replicate something like this. But yeah, I forget where I was going with that. But, I think Jensen's living that life right now. Who's buying the SoFi dip? We are. Add another slice, kind sir. Thank you, Kevin. I do appreciate that. I'll make sure to put that in the portfolio. I don't know if we're close enough to like the $30 range to just like say, hey, I'm going to go live until it hits. But I would love to. I would love to just go live and watch. But so far in the after hours, it's not worked out. It's not like we're crashing or anything, but just down 0.5%, 27, which is hilarious how fast you get used to some of these highs. It was not long ago where I was defending this company $20 ago. It's so fun to continuously bet on a name. And I mean, I've purchased at 24 something recently. So I'm still hoping for even higher highs. You'll be live for a week. I don't know, man. I think I don't know if the market is paying enough attention to the data that we're seeing for Q3. I think that's the truth. And I think the day that Devin Ryan or some of these investors or analysts come out and say, hey, you know what? We've done our channel checks on SoFi. Q3 is going to be by far the best quarter we've ever seen. I think if they ended the quarter today and showed off the numbers of what we've seen so far, it would be a record-breaking quarter. Yet we have 14 more days to go. That's what I'm seeing in the numbers today. If they start to show that as well, I think that like I can't move mountains or anything like this, but analysts can. Devin Ryan can. He's one of the best analysts in the entire market. Let's see where he even ranks right now. Devin Ryan is, I gotta find this, the 6th best Wall Street analyst out of 10,000 Wall Street analysts. And he covers SoFi. The 6th best analyst. And he's very bullish on the name. Extremely bullish. He said that his price target was higher than what they've done last time, but they have not assessed it in some time. Okay. There we go. The interview with him was great. I thought so. But yeah, 6 is insane. And it's also not sector based, right? Like a lot of if you look at the analysts that are 1, 2, 3, 4, 5, they're all like, Meg 7 AI investors. Not because because they were assigned those, that's the sector that they were just a part of. So it's not like broken into their sector of like, oh, how good are their calls? I mean, obviously how good are their calls is one thing, but it's also like, hey, if everything's running and you're going to say that everything's running, then you're going to do great. Could the rate cut and dovish commentary push it over 30 this week? People ask me if rate cuts were priced in. I think they're now priced in. 27 is SoFi expecting definitely 25 basis points. Is dovish commentary going to push it even further? I mean, that's definitely possible, but I don't know what to expect. I'll see what Jerome has to say and then work from there, but I don't try to make any assumptions on what he's going to say. But yeah. 25 basis points is, what about 50? No, you're right. But I don't know if we do see 50. I think that might even spook markets. I think I'd rather just see consistent 25 basis point cuts. But I mean, we've seen 50 recently. One of the more recent cuts was a 50. I think that was what? It was either late last year or early this year was a 50. Just to start the cycle. And then they paused. 50 basis points would wreck the market? Yeah, I mean, it definitely could. Last year, this time? Okay. Okay, wait, let's see what some of these comments. 50 is absolutely bearish. Yeah. Any thoughts on Nebius? Thinking about selling some Nvidia to add into my Nebius position. I don't have too many thoughts about Nebius. I'm not playing the smaller names. I like Nvidia. I think they'll do very well. Plus, Nvidia holds Nebius shares in their portfolio. Not very much, but they do. Tanner, are you thinking of BMNR as a trade or a long-term hold? I think this is going to sound silly, but a long-term trade. More like a medium-term trade. Once the technology starts to get really picked up by payment names, that's really what I'm thinking. I think that might take 3 to 5 years. We still have the Clarity Act coming soon. I think that will even lead to more Ethereum adoption and then picked up from consumers from those international players going forward. So, what does BMNR look like whenever Ethereum's at 15,000? Do I think it's going to get to that price? I do. After that, I don't know. I'd have to reassess, but that's what my short-term play for BMNR is right now. Yeah. When is SoFi's third quarter earnings? So that would be like essentially like Halloween, just late, like 29th of October, somewhere around there. What about Palantir and Tesla? I'm not playing those names right now. They're high risk, high reward. Yeah, you're trying to buy the next largest ecosystems in the market. I don't play that high risk. I like buying names that I believe, like whenever stocks are lower, there's a potential for more upside. Stocks can't continuously expand margin forever, or else you risk later on either finding great downturns or long periods of stagnation in the stock price. So, does Tesla find itself to a 10 or $8 trillion valuation by 2038? I mean, maybe. Do I think I could find other 6, 7Xs during that time that were less risky or controversial? Yes. So I'm just not playing it right now until I see a lower price. I would love to have Tesla shares. I would love to have Palantir shares. These look like amazing businesses. Palantir more from an actual fundamental and qualitative standpoint. Tesla more from a product perspective and history of innovative technology in an industry that you're only really seeing the innovation come out of Chinese names. And I think you've seen that across the board where like in many aspects of like real like physical products, China is by far the biggest innovators, and then there's Elon Musk. And he is holding up that standard for engineering and an ability to scale that level of engineering in America. And he's sort of a standalone figure against the brilliant engineers that are in China. So I like that. And want to be a shareholder for both, want to support the cause, whatever. But I'm not willing, like, I'm a little less selfish with my portfolio allocation than to support a cause. I want to put my stocks towards other businesses that also have great causes that have more capital appreciation. I love the cause of Nvidia, putting out next generation chips that are going to further artificial intelligence and boost that stock up. Or, even to some degree, SoFi or Robinhood or some of these companies that, potentially have the opportunity to see massive capital appreciation with lower multiples and less political division. I'm not even saying that Elon, I'm not picking a side whenever I say that there's political division from what Elon says. I just think, like, regardless whether his points are true or not, is that they're alienating to 50% of the population. And that's not good for business. So if he's out of politics, that's great. But he said he's been out of politics for a long time. Then he like talks about how, the UK is silencing people or something like this. And like, that might be true, but that's not out of politics. You're actively engaging in politics, you know? Um, yeah. The Elon glaze is crazy. I mean, it's just true. I said this yesterday and said I'm not investing in it. And then everyone was like, oh, like, I don't know, just saying things that, you know, not to hurt my feelings, but just to be anti me or anti my take. And then I say anything good, and then it's like, oh my God, bro, like go work for him, go shine his shoes. Like, no, I just see the engineering prowess and the ability for him to hire some of the greatest talent in the world. And he seemed to have done that not at one company, but at multiples. And like, what's another thing that I've noticed from Elon is you see people get hired at OpenAI and then they get gobbled up by Meta. And then Meta people will get gobbled up by Google. And then Microsoft people will take people from Google. And it's this big swip, swap. And no one's leaving Tesla. They're all just sitting there. And they all believe in that mission. And they're headstrong on what they're doing. And they feel very mission driven and not leaving. I'm not talking about one or two events. I'm just saying, like, there's a lot of people that work for his businesses, SpaceX, Tesla, Neuralink, Boring Company, XAI, what have you. Yeah. Because Elon is like a slave master. Yeah, paying people millions of dollars to work for themselves he's a slave master where people are working in America. Get real. Okay. The people that go to work, it's their free right. If they want to quit, they can quit tomorrow. Like, come on, let's give some belief that the people that have their own, independence and yeah. Bro put $1 billion in a stock so the stock could hit 420. Well, I do think I'm not, like I said, I'm not buying it. I'm not buying the stock right now. I was a big purchaser before, but not right now. And yeah, I don't agree with the purchases of $1 billion being the most bullish thing ever. I mean, it does look like he's trying to push it to new multiples. But passion versus job. Yeah. Yeah. Okay. Tanner, as a Nvidia holder, the new Tesla chips, AI5 and AI6 worries me. I would not worry. Elon's come out many, many times and said, hey, you know what? Nvidia's got by far the best product. Until that changes and we can create our own custom silicon, then we're going to continue to buy Nvidia. Though this is the same thing with the reports of like, hey, you know what? US government's trying to reduce their reliance on Palantir. So many articles have come out through the years saying, hey, you know what? The biggest companies in the world are reducing their reliance on Nvidia. Record new revenues, record new amounts of margin. I mean, Jensen understands that his product has such an advantage that he'll up the price. Their gross margins are going up. They're right now, or a few quarters ago, there was like 71%, 72. He just posted 73. They want to get to 75 by the end of the year, which is where they were before the Blackwell ramp. So he's going back to those customers after they just reported earnings saying, hey, you know what? NVIDIA's not all that. We've got our Trainium chips. So he sits back down at the sales thing and goes, all right, Satya, you want some more? Mark, you want some more? All right. You know what? The price just went up a little bit. Okay. But no big deal. I mean, it's 72 to 73%. You're going to make 8 times the revenue of what we're charging you for over the course of the 4 years of the lifespan of the chip. So, I mean, what is it to you? You know, continues to make more sales, will be the most profitable business in the entire world in 2025. In real 2025, I'm not talking about their fiscal reporting. And, you know, life goes on. So, but that's the hard part about investing, is separating all those reports that come out that try to pull you away from your life-changing money, life-changing investments. And some of them are real. Some people have real bear cases. But you have to really look at the performance of those chips, the scale of those chips, and then what at the end of the day they're actually purchasing. Okay. And by the time anyone catches up to anything that's Hopper or Blackwell performance based, Vera Rubin is coming out. It's not easy to leave the CUDA platform. So, yeah, I feel okay holding Nvidia in the face of AI5 or AI6 chips. Even specifically for some of that type of hardware. I mean, it's not like Tesla has not been able to make their own chips. They have. Same thing with Apple. Like not always are external chips always going to be the winning cases. But right now, that's the only thing that Nvidia is worried about is their data center chips, which means that has their full focus. The insanely high talent that Nvidia has is whole focused on being the chip that supplies the most tokens to hyperscalers, not including what they're doing for the Jetson chips for robotics, and then some of the chips that they're doing for self-driving. But those are side projects, and you might not see the market share take as you do for data centers. Apple did the same. Yeah. Yeah. But Intel and Nvidia are two different things. Intel, like that's the other thing too. Intel got over their skis and wanted to own the entire supply chain and everything. I don't agree with that. Jensen's never tried to come up with its own foundry or do anything like this. They're very happy with being a middleman in a supply chain, and they've never veered from that. They've never tried to fully acquire CoreWeave or own their own data centers or anything along these lines. They'll come up with these small deals where they'll rent out or they will acquire back some of the compute from unused compute from like CoreWeave or something like this. Like that's perfectly fine, but they will never overstep their boundaries. And that's what I love about Jensen. He's just a slow, methodical winner and doesn't try to get above that. It's quite great. Can we talk about Hood's runway leading into 2028? What do you mean? Help me understand that. I think, they're an extremely profitable business. If markets stay bullish, hopefully they continue to increase market share. I ended up tweeting about that. If you guys are not following me on X, I try to put out some stuff that, might not make it onto the stream as quickly. I like to highlight some of the stuff, but sometimes I forget. But they ended up showing off that over the course of the last few years, 2022, 2023, 2024, for equities, they've continuously increased their market share. They've gone up about 111% on their equity market share, and it's still below 1% of the market. Options are actually at 7.2%, but that's still up 64%. And most of the market that they're actually creating here is not existing market share, it's new market share. They're creating the market and then taking that market for themselves. And then once again, for margin and crypto, they're spiking up once again. Okay. Do you see Nvidia dipping into 150s, 160s this year again? I don't see why they would. I don't try to make Harry, by the way, I got your donation the other day. I didn't call it out. It must have just passed me when the chat was busy. I apologize for that, but I did see it, and I absolutely put it towards the community portfolio. So you could see that in the community portfolio right now. Water break. Tie-dye Tyler's right. I mean, it's water break time. Is it still too late for coffee? I don't want to spill it, but absolutely not. So good and tasty. If anyone's seen that video, that's the greatest video on the internet. This chef, he's like making food and oh man, he just loves it. I freaking love it so much. I got to pull that video up one day. It's so funny. Every time I sip something that's good, I always, okay. Now, the community fund, however, as we were talking about, is starting to crawl its way back. Remember, this is the community fund. I keep having to highlight this because this is not what my portfolio looks like. But we're still down. We're going to climb back up. SoFi was down today. SBET trying to climb back up. If what I hope happens is that, Ethereum ends up continuing to climb, that some of these stocks will go up like SBET and BMNR, and those won't be losses to the portfolio. Same thing, Nvidia, AMD. Hopefully these continue to do well for artificial intelligence. I can't tell you what's going to happen with Abcelera, UNH, or any of the other healthcare names. Clove is a bigger position in this portfolio. I've got zero idea. Those are your guys' picks. Thank you so much. But I'm holding on with that's on borrowed conviction. I can't sell until, But SoFi, thank gosh, one of the largest positions in the portfolio. Appreciate that. What we are going to do, however, this fund got started on July 8th. On October 8th, because we are going to report on a quarterly basis. I don't care what Trump tells us, okay? We're going to report on October 8th. We're going to sort this via the biggest losers. Hello? What happened? I think I must have clicked the news thing or whatever. We're going to sort this by the biggest losers of the total amount of time. And in that quarterly report, the people who have donated, including people like Evan, are required to show up to that stream. I have an entire list of everyone that has ever donated. Okay? Whoever gave me a Novix, SBET, Chime, what is this, Grinder? Big Bear AI, Fiserv, Twilio, Duolingo. The list goes on and on. Okay? You will have to speak up for your position. Doesn't mean I trim them. In fact, SBET, even though it's it's down a lot, does not mean that I'm going to sell SBET. I've got it in my own portfolio. But it's not even that we're going to name and shame. But you will have to come to court. You'll have to speak up. You'll have to bring your evidence. And in the court of public opinion, meaning we're going to put out a poll to decide of if we're going to trim your position. Although the donations mean that I'll put it in the portfolio for 12 months, does not mean that the greater chat, for the greater good, that we will execute your position in lifetime. We'll have public executions of your stock portfolio. You'll be fine. You're safe. You're at home. But a Novix might get blown away. Okay? I'll defend my Apple. Just Steve, I think you might be fine with that name, but this is going to cut out some of the people who are just giving me, companies that maybe they don't even believe in as much. You got to meet compliance. You got to give me the due diligence. Okay? But it is in the court of public opinion of if you survive. We're going to bring the gavel out. And none of mine will be gone. Paul, appreciate that. I mean, that's awesome. But we're here to show other retail investors. I want to create and show to other YouTubers that my retail community is, we're superior investors. And right now the portfolio is down. And everyone else's portfolio between the times of July 8th till now, no one else is down. I'm not down. But the community portfolio is not showing what the rest of the market is feeling. So that needs to change. By the way, this is all for fun. I love every single person who's ever donated. And even if your stock gets absolutely obliterated and you get banned from the channel, just know that I still love you. Okay? You might not be able to use the chat function or see the stream ever again, but we love you and we appreciate you. I'm kidding. I'm kidding. No one's going to get banned. But if these do not have good use cases, if you've given me Chime just to spite SoFi and you don't know anything about the business, then, I mean, I don't know what to tell you. We're here to do real quality investing, quarterly rebound, and maybe nothing ends up getting rebalanced. Why would we get banned? I feel like you guys listen to half my words. It was a joke. I'm just comedy. Just for the humors. Give us the timeline. It's October 8th or whatever. Like, what? I don't know what day that falls on, but we're going to have to figure it out. Please don't ban me. Where's Honeywell? Let's go take a look at Honeywell. Here, I might have to look it up. All right, you're fine. 47th is perfectly fine. But how do we have 53 names that are in the... Oh, wait, is this total or is this on day? Oh, no, okay, that's on day. I was like, wow. Okay, we have 42 names that are negative. Shark Ninja, how did you do this to me? You'll be fine, Evan. 8th is on a Wednesday. Sounds good. And if it's not fun and we don't want to do a quarterly rebalance, I don't know. We don't have to. I just thought it might be fun to do some rebalances, and then you guys, you guys are ridiculous. What the heck is this? What is this? Who is that? That's not me. Is that me? It is me. I can tell by the ears. What's going on here? Not happy. Twice a year. Yeah. We'll be the first one to implement. They'll be the first one to implement the 6-month rebalances. I want to hear a good hedge for this week. Go on prediction markets and bet that the Fed won't cut rates. I'm sure you like. Let's go see what that Fed rate cut. Let's see. Number of rate cuts in 2025. I don't know if that is. I mean, if you're betting on 0 rate cuts in 2025, you could 50x your money essentially if that doesn't happen. But is there one just specifically for Fed rate cut September? Fed decision in September. Let's see this. Okay, so you guys want a good hedge. Like everyone talks about like, oh, this is all gambling or whatever. I'm not saying you guys have to play this, but like you want a good hedge for tomorrow? Play this. I mean, you guys think Fed rate cuts managed tomorrow? You can make a crap ton of money. 3% to 100% if you get it right. Go ahead and play this. Now, I'm not going to play it. I think that there's a 25 basis point cut happening. I'm going to bet on the 92%. But the 3%, not too shabby. The payout, if yes, that's crazy. That's absolutely crazy. Find a quick 33x on your money or something like this. How do you get paid on Kalshi? Or even you don't even have to go to Kalshi. You can go to just Robinhood's prediction markets. I'm sure they have this exact same one. But essentially, if you're betting and there's a 3% chance that rate cuts are going to stay flat, it's not that Kalshi is deciding that it's 3%. It's all the money that's betting on the other side that's causing it to be 3%. So if more money is piling into one option, that's essentially saying, hey, this option's less likely. And so, hey, if you think they're going to keep flat, then you can make a ton. But you're taking other people's money. It's like any other market. You're taking all the money that people bet on, oh, I believe 25 basis point cuts, or I believe that even more than 25 basis point cuts is going to happen. That's how that money gets split. Kalshi gets paid just because they take a penny from every dollar contract that ends up getting signed. So they don't take a part in the winning pool. They only take a part in the contract. They're a toll road. They let you duke it out with your other gamblers on the other end of that trade. Thoughts on BMNR? Good. I've said it so many times. I think that Ethereum is going to help with cross-border payments. That's going to do well for markets. Just short the queues if you want that bet. I don't know if what would give you a higher percentage, but I would prefer to do the prediction markets. I just think that would be a cleaner 33x than worry about the volatility of shorting triple Qs. I can't imagine that pays you more. Unless you're pouring a ton of money into the September Fed decision, you're actually changing the rate in which, and by a lot. If it's 3% or 4%, do you really care? If you're pouring in enough for it to turn from 3% to 10%, maybe you do. But that's the thing that I love about those prediction markets is that if you are a dynamic trader and you are looking for hedges, that's one of them. That's a pretty easy way to do so. Tomorrow we make money. I don't know if it's that clean, just because if the chances are 93, 94% of a 25 base point cut, an additional 3-4% for 50 base point cuts, that is people are not betting for today. People are betting for tomorrow. And the high majority of the money is betting on future rate cuts. So that's already quote unquote priced in. Today was not a bad day for BMNR. You're right, Evan. It's now sitting in after hours, 56.29. Yeah, gotta love it. What if Jerome Powell just says no rate cuts? I mean, SoFi will fall. The people who had bet 3% will do great on those things. It won't change how I invest, though. Yeah, Yeah. Imagine the buying opportunities. I mean, that is true, right? If you think that it's just going to continue, like artificial intelligence is going to continue in the direction that it is, blockchain, more people going online, like just the general market tailwinds that we see in technology stocks, then yeah, like continue to buy those names. Paul says put it on no rate cuts tomorrow. Geez, why? I mean, you got SoFi in your logo. Why are you betting on that? Helping me hedge my portfolio. What do you think of StubHub? I don't. JT puts $20 on SoFi to the moon. JT, thank you so much. I absolutely will. Looks like we'll be buying tomorrow, which is just slightly in the red in the after hours. So give me a little bit of a discount. JT's long time supporter of the channel. Thank you so much, brother. Really do appreciate it. Paul says sold half of SoFi. I haven't forgotten, Paul. I think about you late at night whenever SoFi, I check my portfolio and it's up a ton and I go, man, hope Paul's doing okay. No, I'm kidding. But, obviously everyone's portfolio is a little bit different. And if you were not sleeping well at night and you're believing that stocks are overpriced, then hey, that was the right decision for your portfolio. If you took your house money off and you're keeping play money on the table, that's great. I know a lot of investors that do that. But thoughts on RickTech Robotics? A 0. Yeah. Tanner, why are you buying Tesla car? Why don't you buy Toyota RAV or something? I just got a Discord message from one of the people in Discord. I don't know why I'm still getting Discord messages while I'm live, but that's so funny. It just pinged my computer. Why don't you get a Toyota RAV? Because I don't want one. I want a friggin' Tesla. I want to charge my vehicle from home. Yeah. I actually just found out that my house has all the stuff set up for home charging already. It's going to cost me almost nothing to get that all set up. So that's going to be really nice. And I didn't realize that whenever I bought it. What Tesla are you getting? I'd get a Model Y. Get a Model Y. Yeah. Little home charging kit. And yeah, never pay for gas again. Oil change? Who needs them? Yeah. Aren't some RAV4s plug-in hybrids? Yeah, I like the Tesla. Tanner, do you still have a dog? Whatever happened to her? She's still trucking along. She's good. Just bought 2 Model Ys this past weekend. Nice. Yeah, I think I would get either the long range or long range performance or something like that. I don't know what yet, but I do like the products. I love the fact that you can buy a car that gets software updates over the air. I think that's really the difference between buying a phone versus a smartphone, is that it hopefully gets smarter and the product gets better even after you've purchased it. I think that's pretty insane. Yeah. Canada cold might not be good for battery. It's so much better than people worry about. There's tons of Teslas up here. Everyone around me's got a Tesla. Home charging was awesome. I almost never went to a gas station all during COVID. Yeah, I know what you mean. Seeing a lot of hype picking up on DLocal. I haven't seen any. Like I'm seeing the stock go up, but I'm not seeing like a bunch of people reporting on it. Obviously, like I said, today we ended up seeing the Google news for AI agentic payments that they're going to be a part of with Google. I think these are good companies to be in partnership with. But I'm not seeing like, something crazy. However, I didn't realize the short interest in DLocal is huge. Over 13%. Wow. Maybe that's another one that I need to take a look at. They also had a price increase from Citibank up to $17 a share. We adjusted our estimates after strong Q2 2025 results. Also considering the upgraded guidance for 2025. With that, we raised our net income expectations by 13% for 2025 and 5% for 2026, while volumes are decelerating on tougher comp base. We still see solid growth potential ahead. 33% for 2026 is our estimate. We estimate, let's see here. Yeah, they're increasing their price target to $17, implementing a 21% upside and trading at an 18.6x PE ratio for 2026 expected, which even that, it's like so unbelievably low. It's just funny how like those types of multiples will just change as the stock changes price. This is crazy. $50. I made crazy of money on SoFi due to your channel. Thanks, buddy, from my family. Use at your discretion. Any thoughts on BM&R stock price in 1 year? BM&R is a hard one to put a stock price on. Okay. Wow, guys. SoFi on me. Kindly. Thank you. I will let me take a screenshot of that. I'll buy some SoFi. Guys, thank you. Seriously. Not needed. Very much appreciated. But just going back to this comment. Any thoughts on BM&R price target 1 year from now? The range is so freaking huge, right? I mean, I could see it staying where it is. I can't really see it getting any lower. And I mean, just generally, they're still going to continue to either stake the Ethereum, make some more money, acquire more Ethereum, further that progress. But I don't see that happening. I do see the stock price going up going forward. And if Ethereum does what I think it's going to do, that's probably going to lead the stock to anywhere from 75, 100, 150 going forward. Like I really do think that the stock price will be very explosive going forward. I could be completely wrong. It's the most speculative name that people could put out there. But the speed at which they've acquired their Ethereum, going from like, essentially almost nothing in July to, 1.7 or 1.8% of outstanding Ethereum in a few months is just insane. They can't keep up that rate unless the stock price stays continuously high, but they will continue to acquire. Now, am I basing this off what Tom Lee's assumptions of ETH is? No, because if it was up to him, then we would be at 10 to 12,000 in ETH by the end of the year, and we wouldn't even be worried about where the price is today. We'd just be buying hand over fist. The real thing is that people are not believing his price targets. I have a very, very hard time believing them. 10 to 12,000 by end of year. Well, I'll hope for 6 to 7. That would be great. But regardless, I think it's all bullish going forward. And then kindly, thank you. SoFi, nothing has made, a better experience than like going to the Hood Summit and everything like this. And hopefully one day we get a SoFi Summit. I'd love to meet all of you guys and, hear how SoFi or some of these investments have changed your lives. But that's what I even got to experience at the Hood Summit. Just people saying, how much they've made on Hood, how much they've made on SoFi, how much they've made on Nvidia or Google or some of these other names. It's just been mind blowing. It is like the greatest job to have, is if you can play any part in people's ability to make just ungodly amounts of money. What people hope to retire with, people are making in 18 months betting on some of the most explosive growth names in the world. It's phenomenal. Like, it's probably hard to see it from my side, but it is. It can be very emotional at times. Like, you're changing people's lives. It's crazy. And if I get that wrong, that also is going to weigh very heavily on me. So that also like scares me a ton. Is like, I know I'm going to make a wrong pick one day, and due to the success of last calls or something like this, that someone's just going to go, oh, DLocal, maybe that's the one. I'm going to put my entire portfolio on, and I'm going to do it with leverage this time because SoFi worked last time. And I don't want that to happen. But I also can't control everyone's individual, investment styles. And, but yeah, so I try to I try to be honest about what I see. And I think if I do that, then the same thing that's allowed me to find companies before will just inherently help with finding them the next thing, being able to try to, spot what's next. But I'm not an oracle. I'm not a prophet. I'm going to get things wrong. But I'm happy it's been working out for everyone so far. Dude. Again, thanks a billion. Use at your discretion. This is nothing, just showing my appreciation. It's changed mine and my family's life. Thanks, man. Appreciate that. And I'm so freaking happy for you. I don't know where you are, if you're in the States, Canada, whatever. But if I'm ever in your city or something like this, I'd love to meet. And yeah, that'd be awesome. Super happy for stories like this. And it doesn't work out for everyone. Maybe some people have sold too early or something like this, and they, it takes a lot of conviction and a lot of guts to make life-changing amounts of wealth on one trade. But congratulations. Are you allowed to talk about downside risk? Yeah. I mean, there's, of course. Try to. Tanner, your hairline looks bearish, and now we're back to reality. Yes, I'm aware. For the Hood investors, like, you guys got to be pretty excited looking at me. I mean, I'm a potential customer. I'm coming up. My whole life, I was like, man, my hair looks thick. I'm looking like it's all good. I can't even, like, I've got thick hair, but the front is not talking to the back. I mean, it's just, there's a party in the back and it's all headed that way. They're moving that way. Who knows? Can't help it. Got to lock down the girlfriend before it's all gone, and then she's got nowhere to go. But let's go to Turkey. Yeah, I'm all good. I honestly, the thing is, because I am happy in my relationship and everything, I don't care. Like, it could all just be back here. Or this could be gone and it could be everywhere else. I like, then it would just be me. Like, thick hair, just not much of it. Yeah. Does he see this chat? Where is he reading the chat from on his screen? I see you. I got you. I see any, whether you guys are on Twitch or on YouTube or wherever. I see the chats. Fully aware. Okay. Let's see what else is in the news. Is there anything happening, by the way? Is there any breaking news that's coming out while we've been talking? We've been live for almost 3 hours. You're telling me that there's nothing that's been like earth shattering and changing people's perspectives on the markets. Robinhood banking coming this fall. I mean, that is going to be exciting. I do think people are underestimating that they will do well. Their customers are going to use it. That doesn't worry me for SoFi. It just benefits two different companies that are taking away from a mountain of customers at the big banks. Everyone's just waiting on the Fed. Yeah, I mean, yeah. You know what? That's a good way to say it. This is the calm before the storm. Reverse mohawk, I've never heard it. I can picture it in my head, but I've never seen that in my life. I hope that's not a thing. Tanner will be Walter White. We need a cook, Jesse. Yeah, no, I hope one day. I'll just go bald. I won't care. Whatever. I don't hope one day that I have, cancer and I'm cooking crystal meth to, fund my family's future. Like actual Breaking Bad. I just meant like, maybe one day I'll be bald and I won't care. I think that's more where, you know what? Some jokes land, some jokes don't. And that's it. We move on. We don't talk about hair in this house. Love you, Evan. Appreciate you being here, brother. Okay. I can't wait for Hood banking. If you can't wait, go to SoFi. But yeah, it's going to be exciting to see the types of products they put out. Another way to look at another comp, what it does for the stock. It's going to be another full revenue segment for them. I'm pretty excited. F Hood banking, but why does some of the SoFi fan base just hate on Robinhood? Why can't they just put out a good product? I really do think that the best angle for me as an investor was to just buy both. I think they're both going to do great. And it's worked. Recession in financial products. I think the recession fears are a little overblown right now. I'm not seeing anything too scary. Rate cuts are here to help. We got a long ways to go. The hate for the reason of hating. Yeah, I don't know. I think maybe some people have missed the opportunity or the investment sometimes, and they don't want to buy it at a higher price, which I understand, but I don't know. Let's just try to pick the winners, Let's not pick a team. Let's just pick the winners and hold them for the long term. And that could be multiple winners, and they can compete. I got 1K Hood, 2K SoFi. I mean, hey, you're heavy Hood. That places you a lot heavier in Hood than it does in SoFi. I mean, guys, I think that's where we wrap it, right? Another person asking me if I own BM&R, that's got to be it. Ladies and gentlemen, thank you all so much for watching. Really do appreciate it. Appreciate everyone coming out to show their support. I'll have to add many stocks to the portfolio today, so I'll be setting up a bunch of buys. But thank you. And honestly, Freddie said it better than anyone. This is the greatest community in, not just the investing landscape, but maybe even YouTube in general. You guys are amazing. And I love that not only do I get along with you guys, but a lot of you guys just talk independently of each other. This is why we have the Discord. There's nothing to sell there. There's nothing that we do there. It's just a free space to talk with people after the stream ends. So if you want to continue your DD or conversations on the Discord, check out the description down below. But there's nothing to pitch or angle on. I drop in there from time to time and talk with you guys, but it's not like I'm there 24/7. So don't expect that. But thank you all so much. Appreciate your time, and I'll see you tomorrow. Bye for now.